to take optimizer for today's. I think I'm audible right now.
Hello.
Am I audible? If you can put in the chat box. Thank you. Thank you. So first we're gonna see about the chain what if, and we're gonna see what are the useful things which we can take out of the what if when we are doing either uh, positional trades or intraday trades. So I'll switch for my laptop. So we are taking the three tools today, and so as I was saying regarding the what if, we're gonna see how we can use it when even I'm doing the intraday or the positional trades. I can see uh, Mr. Prabhajana, I think you don't. I think you couldn't able to hear, but you can on your speakers. So we'll go to what if chain what if. So now, why this is a tool in the Quantsapp? There's a reason for it. You might be thinking there's a normal chain which we can see in any online website. We can see on the different applications. But what is unique apart from that? Uniqueness comes when I say I want to analyze a maybe a stock or maybe a index. I want to see that if I'm holding a particular option, what could be the effect the option Greeks can put on it. So here we have the Bank Nifty chain. You can see all these strikes, premium, change in premium. So it's been highlighted how is the change in the premium that has occurred. Then you have the IV, OI, change in OI and volume. And below that, you can see the Greeks for all of them. So this is the all-in-one where I can see the Greeks, which comes very important when I'm doing the options. Like say, if I take the 25th of Feb expiry, if any one of you have any particular stock to look into, they can also tell, or we're gonna take Nifty for our example. So you can also put on the chat box if you want to see how the option premium will change as the days to maturity or theta value, how the theta value will impact the option premium. Okay, so we are taking the Nifty option chain. We're gonna analyze and see. Yeah, sure, Mandar, Mr. Mandar, we're gonna take the Z Entertainment later. So now I think we'll take this small recap about the option Greek, how the option Greeks can actually affect the option premium. So first and foremost comes the underlying, that is called the delta. So you might have heard about the delta. You might have heard that delta will affect your stock in a positive or negative way depending on the stock movement. So if I say that if I'm buying a call option, so what I'm looking for the call option prices to go up because I am buying an option. And how a call option prices will go up, that depends on if the underlying is going up. So call option property is that if underlying prices go up, call option prices also goes up. So this is the basic thing. Now this thing is determined by the delta. Delta tells you that how much percentage or how much point of change that the option premium will have. So I'm gonna repeat it again. Delta tells you how much an option premium will change if there's a 1 point movement in the underlying. I want to know what will happen to my option if I'm buying in the money, out of the money, or at the money. So this is my at the money, which has been highlighted in the black, which are very near to the spot price. In the money, which are highlighted in the green section, if you can see here. So in the money tells you that the option already have a portion of profit in it, and out of the money, which has been highlighted into the red, or I would say purple colorish section, which tells you that the out of the money option can either become will become zero as the is approaching to the expiry. So I want to know first, I want to know the impact of underlying if the stock price is going up or going down. So how it's going to impact my option premium. So I say today Nifty is trading future. Nifty future is trading at 15,332 level. And if I say if it goes to 400, now you can see that 15,350 call option will increase by 35 points. Why so? Because delta is telling me that 1 point movement will give me around 0.55 point movement in my option premium. So this is the basics which has been explained by the delta. And as a beginner, if I want to know if I'm taking a call option, I don't have a more information regarding the option Greek or the complexity of the option. I want to know that if Nifty moves by 100%, 100 points or 70 points, then what will be my the option value. So this is a one thing which I can analyze here by chain what if. So I hope you have understand the underlying impact. So if you have understood this, please you can comment on the chat box. So I will be on a more clear part that you are getting the points, or if it's required, I will explain it again. And the reason I'm saying this because we're gonna see the step by step of using this particular tool along with the changes in the option premium that will come. So I would request everyone to put your whether you are getting the points or not. Okay. So what we are looking in the chain what if that as a person I want to know that how much my option premium will be affected if there is a change in underlying. So we know that call option prices will go up if there is a movement in the underlying, if prices are going up of the underlying. If we know if you are buying a put option and the underlying prices are going down, then you will be get benefited. But have you ever tried looking how much point the change in underlying is going to affect the option premium? So this is what we're gonna analyze here with the help of option chain what if. So Nifty was at suppose 332, I think 332. So this is what the current Nifty prices is. If I say there's a 100-point movement in the Nifty, and I want to know how much my option premium will change if there's a 100-point upward movement in the Nifty. So this particular thing is explained by theta. So theta says if 1 point change in the Nifty, your option premium will change by 0.49 points. So if I say there's a 100-point movement Now I can see my premium has been increased by 53 points, and there's a reason which is explained by delta, that how much your option premium will increase as their increase in the underlying. And same goes with the put also. Put, if the underlying prices are going down and if you are holding a put option, then you will be benefited. But knowing it, how much it's going to change, is being explained by the delta of an option. Now you might be wondering why that I have said 0.49 point movement will become 0.49 movement will become in the option, but why there is a 53 points movement? Because there's one more factor which is called the gamma, and that thing change the delta value. So that's a derivatives of derivative that is going on, so we gonna skip that part. But the focus should be on how I can analyze the option premium with due effect of the underlying change. So this is my motive of looking into here, that if I'm holding a call option or a put option and I want to know how much the premium will change if the underlying is changing. So it's been explained by the this particular thing. Now suppose I was expecting 100-point movement, but the movement did not came, and due to which I have to hold my option for next 3 days, 4 days, or whatsoever. And I'll tell you the most of the people what they think, that if until and unless my target will not come, that underlying will not move, I won't be taking my position off. And that is the one mistake which we all do, because option is a wasting asset. It comes with a expiry, so it expires at a particular time, and till that expiry it has time value of money. That particular time value of money is explained by theta. So theta says, if you are holding a option for a particular day, you're gonna lose a small amount of money or maybe big amount of money. Now the theta here is 9 rupees almost, which says on a one day you are losing 9 rupees. Next day you're gonna lose something, then you're gonna lose something, which I explained by the theta. Now I want to analyze how the theta will impact my options, and that is which I can do from this. So now I say if I hold my option for the next 3 days, or let's say 4 days, now you can see the profit of 50, almost 53 rupees, it's being downgraded to 12 rupees. And that is the reason we say holding option, it's not a good idea. Is we always say ki when you expect a good movement, like sudden movement in the option, then only holding an option, like buying an option, is a good thing. Otherwise we started losing money. And why do so? Because of theta. So till now we have seen, if there's a change in underlying, so how it's going to impact the option premium. If there's a change in theta value, then how it's going to impact the option premium. So what we have done, we have done almost 60 to 70% of looking into the different factors, that how the option premium get affected due to the change in underlying movement and the time value, that is theta. Now I want to see, and which is most of the people forget to look into, that is IV. That's a employed volatility, and that's one of the factor which gives a very good insight of whether the option will be in the making the money or not, because employed volatility is uncertain. It can shoot up anytime, it can fall down anytime. So rather than right now going into too deep into the volatility, we will gonna see how the volatility is going to affect the option premium. So we have almost done with the scenario. The last part is the IV. So if I say there's a sudden increase in the volatility, of the underlying, and the volatility spiked by 15 or 16%. So now you can say that the premium is now increased to almost 31 and a half. And if I say that volatility is falling down and it fall down by 13%, now you can say the option is in loss. Even though you bought a Nifty 15,350 call option, it had a movement of 100 points, you made money, but you hold it for the next 4 days, you started losing money. Then again, at the same time, IV also fall down, which gives me that even though there's a movement in the Nifty, I'm losing money. And that is why it is said that as a trader or as a person who is trading in the options, not only looking into the underlying is only sufficient. You should also be looking into the different factors as well, which is days to maturity and the IV change. So this is the place what if is a tool where I can do all these things. I can analyze the chain of any FNO stock, looking into how the underlying movement, IV change or days to maturity is going to affect my option premium. So I hope this is clear to you. We haven't gone too deep into any of the Greeks, which is a main point, but we have seen the impact of the different things which option can have. So if you have understood, please put on the chat box replying yes or no, or I will explain a certain point again. So I'm expecting some questions or maybe and then we're gonna see about the Z. Uh, so I think it's all clear to everyone. So we're gonna take the example of Z, and I think that will clear most of the thing again. So what we have to do, we have to go to chain, select Z. Okay. So this is the tool option chain where I'm taking my expiry, my stock, and here I can see the call option and the put option. I can see the future price of this stock and the lot size. Here I can see the details about all these strikes of the call. And the put option. So the features, if I want to see here, I can see all these strikes, and the main point, I can see the Greeks of all these strikes, and then I can do my scenario analysis where I can see how the option premium can be get affected due to the underlying change. So if I'm buying a call option or a put option, and I want to see how much an option premium will get affected if the change in if the underlying prices move. So if I say if the prices move to 210, then I can see the impact of it on my option premium. Then if I say if I want to analyze this particular option chain for the next 3 days, that what will the value of the options after 3 days, then I can do so. I can also look here that on a particular day at a particular time, how much, how will be my option premium. So if I say I on 18th morning 10, I want to know what will be my option premium. So I can see from here depending on the underlying value. And then the last, I can see if employed volatility increases, so how the option premium is going to increase or decrease according to the change in IV. So I think this was a summary of using option chain and how we can analyze the option premium with respect to change in IV, change in time, and underlying movement. I think now, if you are clear with this point, that how we can use this tool to analyze any option chain. Now, we will moving towards the, so IV stands for employed volatility, and it directly affect the option premium. If the employed volatility is increasing, it's gonna increase the option premium. If the volatility is falling, it's going to decrease the option premium. Now we're gonna move to the next tool, that is trigger. We're gonna see how we can use this tool. So option trigger is a tool where I can find the stocks which on the urge of breakout or breakdown, but more from the option side. I'm gonna see how the option market participants are doing on that particular stock. So if I say that, if I say for example that if a particular stock is at 100 and the highest call is at 101, let's take an example, and I want to see how the writers, I mean the call writers and the put writers are doing at that particular point. So I can look from here and can see my option chain and can analyze for the further steps. So on the left side you have the calls and on the right side you have the puts. Now if you notice here is the highest call and the highest put, which means for all the FNA stock, it's giving me the highest call only and the highest put. So if I say Aarti India is almost trading at 1229. The highest call strike means the highest number of call writers are standing at this particular point, and the highest put is at 1200, meaning that highest put open interest is at 1200 level. Now I want to see that how the call writers and the put writers are behaving, whether they are adding the new positions or whether they are declining their positions. So here I will be interested in looking into the stocks which are very near to their highest call and highest put. So now you can see the call difference and the put difference. So what is that? Call difference and the put difference is the difference of your highest strike, highest call strike, and the future price. So if it's more than 5%, it has been indicated in the white, you can see from here. If it's between 2 to 5%, it has been indicated in the yellow, and the difference is below 2%. So the difference of the highest call and the future price is below 2%, then it has been indicated in the green. So you can look here, you can analyze that if you're looking into that, if it's on green white side, it means the highest call and the highest put is very far from their future price, and the difference is between 2 to 5%, means that stock is near to their highest call and the highest put. And if you see that sorry, if you see the difference of the highest call from the future price is green in the green level, then you should be more cautious in those stock looking into now how the option writers are doing. So if we see, let's take sec. Yeah, so you can see RBL Bank. Now if I want to look into this particular stock, and why I have chosen that, because the difference is in green. Highest call difference is in green from the symbol, and at this level you can see the call writers are reducing their positions. So I can see the call writers are more nervous at this point, and further I want to see, I can analyze that like call writers are feeling very jittery or nervousness at particular time. That's why they are unwinding their positions. So now RBL Bank is trading at 258. Highest call is at 260. Current OI is you can see, and how the OI has changed on a particular day, means today from morning to the EOD, how the OI has changed. So I can see OI has declined by almost 12.5%. So I should be looking into these things, that how the call writers are looking into, because call writers are looking very jittery here, which gives me an indication that okay, there could be a further possible price movement which could be seen here. Then further, you can also open the option chain, open interest, and option gain. So we will see how the writers are doing for the RBL Bank. We can see that RBL Bank is almost on the highest call strike, which was the vital resistance. So RBL Bank is trying to cross this level, and you can see the call writers are also removing their positions because they are little jittery, they are little nervous at this particular stage that prices can go up. So this is how you can use the option triggers. I hope the demonstration of this particular tool is going good till now. And if you are understanding how you can use this tool, please comment on the chat box so I will able to know that. Thank you. So option triggers, we're gonna see the second part, and this is very similar as we have seen the highest call. Now highest put means where the highest call writers are standing for a particular index or stock, which is the vital support level of that particular stock. Highest put I'm looking as in, so that's my vital support level. I want to know how the option writers are doing when the prices are near to the highest call and highest put. And same as the color difference. So if the color difference is on white, which means that the highest put strike, so it's a 1600 strike, it's very far from the future price. It's almost 12.5%, which tells me the prices, highest put prices, is very far. And if I say the higher, if I see in the yellow, which indicates, so if I can say Adani pots, which indicate the difference of highest put and the future price is between 2 and 5%, which could be a further movement which could take this particular green level, yellow to the green. If there's a more price decline and it falls below to 2, the difference goes to 2%, then it will change to green. And if a stock future price is trading very near to the highest put option, that has been indicated in the green. So difference between 0 to 2 has been indicated in the green. I hope I am clear till now. Same as here, I will be more interested looking at this stock which is trading very near to their highest put. If I say Britannia, we can see the Britannia here. Britannia is trading at 3,406. So this is the future price. Highest put writers are standing at 3,400 level. the difference is very minimal, just a 6 point movement points difference between these two. And I can see at this level that put writers are feeling very jittery. They are feeling very nervous at this particular point, and they have started unwinding their positions. And which means the support level at this support which has been created at this level started to shrink, which is the put writers are thinking the prices can go further down. That's why they are unwinding their positions, which could be. So you should always keeping this is an educational purpose demonstration. It's not an advisory. So keep this disclaimer in mind. And we are doing the analysis of how we can use these tools in a more effective way and in a more practical way for the day-to-day usage. So if I say Britannia is trading almost near to the highest put, and I can see the put writers are feeling very nervous at this particular point. Same with SDFC Life, put writers are reviewing, unwinding their positions at the highest level, highest put level. But if you go down and say Amara Raja batteries, Amara Raja batteries, even though future prices are below the highest put level, put writers are increasing their position, increasing more and more positions into it, which says that they are more confident that prices will not go down, or there's a possibility they are looking forward that prices will sustain at this level only. So you should be looking into on a daily, I think almost in an hour or couple of hours in the day, that how the writers are doing on a particular stock if it's near to their highest call and the highest put. So this was about the options triggers, which helps me to find out the stocks which are very near to their highest call and the highest put. I hope you have understood. Then we have also seen, uh, we can also go to the open interest tool from here and see the open interest of all these strikes. We can see whether they are adding the positions or unwinding their positions. So if you have any particular doubt, you can also ask. And if you want to look into a particular stock, you can also put in the comment box. Okay, so we are going good till now. And I hope you have understand this. Now we're gonna move to the next tool that we are taking for the demonstration. So we're gonna back to home section, index contributor. This is very interesting tool. Uh, so what really happens sometimes that we see that that only one stock is taking the Nifty and Bank Nifty on the positive and the negative side, and we like on looking into which that stock is, how much it is contributing to the index, whether that particular stock, what price movement that particular stock had, which is moving the Nifty or the Bank Nifty. So this is a tool where we can see and actually analyze here. So the point of index contributor is to gain a knowledge of a 1% movement in a big weighted stocks, or it could big weighted stocks means Reliance, Kotak Bank, HDFC Bank or SDFC, if there is a price movement, if there is a big price movement in these stocks, so how much they are contributing to the index. So there was a point still I know that when SDFC and SDFC Bank were used to jump or decline in a big way, and it used to take the whole the index like Nifty in the positive or the negative side. Same with the Reliance. When Reliance goes by 3-4%, it takes the whole index on the positive side. When a Reliance falls, it takes the whole index, takes the takes the index on the negative side. So we are just looking here that how we can look all of them in a one go. So here's a Nifty, and here we have all the Nifty 50 stocks. You can see the stock name. Then you can see from which particular sector it is from. You can say oil, Kotak Bank is from private, Power Grid is from power, Tata Steel Metal. Below that, you can see the index contributor, means how much Reliance is contributing to the index, its current price level, change, that today's change, and the percentage change. So one thing you should be remembering about the Quantsapp, that we take all the future prices. These are not the cash prices. So these are all the future prices which you are looking here. The change in the future prices which you are looking here. Now, if you see the green, that means it's a positive contribution. That stock is in the upside. And if you look into the red, which tells me this stock is in the negative tone, the stock had the negative decline on the particular day, and it's contributing negatively to the index. So this is the point you should look. This is a point which you can look here, and you can see how much a particular stock is contributing to the index. Now comes to the Bank Nifty. So Bank Nifty is a place where like SDFC or the ICICI Bank, Kotak Bank sometimes lead the whole Bank Nifty. So if you see that today ICICI Bank future price were down by 2%, and you can see the contribution. It was nearly 175 points contribution. And on the upper side, Kotak Bank, you can say there was a change of more than 1.5%, and it has contributed nearly 100 points to the Bank Nifty. So you can see if one particular big company is having an impact on the prices, it can actually take the whole Nifty or the Bank Nifty to their side. So if ICICI Bank, Axis Bank, you can see there's a almost 2% decline in the Axis Bank, and it is contributing nearly 125 points in the Bank Nifty. Same way, you can see how much a stock is contributing to the Nifty and the Bank Nifty. Now, so if we go to the Nifty back, we can see these sectors contributions as well. So Nifty 50 is a combination of different stocks from a different sectors. So if I say oil, so it has around 8 or 9 companies in the oil sector. You can see oil sector was contributing positively to the Nifty today. But if you say private bank, IT, FMCG, these were the sectors which were contributing negatively to the Nifty. So this is how you can also use this tool to look into which are those stocks who are contributing positively or the negatively to the with the help of the index contributor. Further, you also have the from date. So what you do from the from date, suppose from the 1st Feb, so that was the day of budget. I want to see the changes that has happened in the Nifty and Bank Nifty from the 1st of February. So I can see that Nifty has almost increased by 1600 point, and that is around 11.8% change. Now here I can see that in Nifty, which are those stocks who has contributed positively or negatively to the index. So one sec, yeah. We can see HDFC Bank, HDFC, Reliance, ICICI, Kotak, SBI. These are the big weighted stocks who has the price movement in the last since budget and the amount of contribution they have given in this 1600 points movement of the Nifty. So this is how you can use these tools, triggers, index contributor for your daily trades, and you can see how these stocks are getting affected by the option writers and how much contribution they are giving to the index. So this was about the index contributor tool. I hope you have understood that how you can use this tool to know the Nifty and Bank Nifty movement, that which are those stocks who are contributing positively and negatively to the index. So we're gonna take the question answer session now, and we'll try to answer most of the questions. So if you have any questions regarding these tools or any other tool, you can post it. Okay, so we have a question. Index contributor, let us see positive and the negative. Okay, but can we see overall effect is positive or negative from this tool or not? So overall effect, I'm not getting a point. Whether you're asking that overall effect on the Nifty or the Bank Nifty, if you can just give me more details about the questions. Yes. Okay. Yeah. So when I say Nifty from the first of Feb, I am looking that how like all these stocks of the Nifty 50, how much they have contributed in the Nifty 50. And if you see in the top here, you can say how the overall effect. You can say the Bank Nifty from the 1st of Feb has a positive 1600 point movement. So yes, we can see that as well. I hope I have cleared your question as much I have understood. Okay. So any other questions like okay, so I think we are done with the session. And if you any of you have any still want to know more about the tools, you can also connect to the advisors in the Quantsapp. And and if you want any support, you can also mail us to the support@quantsapp.com. Where we'll help to answer your most of the queries. And you can also utilize these tools and use them for your day-to-day trading to know more about the what are actually things are happening in the market. And stay tuned with the Quantsapp, as we'll come with the daily webinars for the different tools. And I hope you are enjoying the sessions. I think you are enjoying the sessions. And if you guys can put your valuable feedback on the comment section, that will be very grateful for us to grow and more and more. And if you want to see the recording of this, you can also see in the YouTube in the Quantsapp page. You can subscribe to us on the Quantsapp, and you can also put your feedbacks, valuable feedbacks, on the comment section of this session. on the YouTube as well. So thank you.